Now, here's one stock you may not have heard of, but maybe you should. Indorama Polymers. It's been among the best performing stocks in Thailand in the last 6 months. The country's biggest maker of plastic material used to pack beverages gained 2% since the beginning of March. Our next guest holds Indorama stocks. Doug Barnett is president of Quest Management. Doug runs a hedge fund that invests in Thai equities. Doug, you have a large holding in Indorama. How much more can the stock climb? What will drive it higher?
Well, Indorama 10 years ago was not even in the PET bottle business, and now they're the second largest PET bottle producer in the world, bottles and the material PET. They've been able to grow their revenue 37% a year for the last 6 years, and profits in the second quarter were up 54% year on year. Coming up in the fourth quarter, they're going to open Alpha PET in Alabama, which will add 45% to their capacity. So the key for this company is they've been able to grow in a very competitive market because they're the low-cost producer. And they've been able to make 7% net margins while the major oil companies have been making losses. And we think it's around 5.3 times this year's earnings. So
that project in Alabama will add to capacity. Doug, that project in Alabama will add to capacity, but in terms of bottom line, how significant will it be?
We think that EPS will grow about 33% over the next 12 months.
How about its longer-term prospects? Can you help us put it in perspective versus its rivals? How about its longer-term prospects? Can you help us put it in perspective versus Indorama's rivals?
Well, the rivals are like people like DuPont are exiting the business because they found that they're losing money at the current prices, and that's because they run a very high cost structure. They have old plants that are not of world scale. So IRP has been much more competitive.
Right. I'm looking at your other stock picks. You like Thailand's biggest zinc producer, Padaeng Industry Pub. That's PDI TB on the Bloomberg terminal. Why so? The company's up 43% year to date. How do you play this particular stock?
Well, Padaeng is in the zinc mining and smelting business, and at the current zinc price of $1,900 per ton, we think they're at about 7 times earnings. But this is in an environment where the industrial production is at quite low levels. As China gears up to a regular, normal functioning economy, we think Padaeng has tremendous operational gearing. To put it in perspective, zinc prices peaked at about $4,500 about 2 years ago, and now they're at $1,900 off a $1,200 low. And Padaeng can break even around $1,200. So their downside in terms of earnings is very little. And basically, as zinc prices go up, that dollar for dollar falls straight to the bottom line.
All right. Doug Barnett, president of Quest Management.
It's quite illiquid.
Doug, thank you so much for your thoughts today.